As an enterprise cloud software provider, Datadog may not be a household name. However, the monitoring and analytics platform that serve developers, IT personnel, and business users is one of the fastest growing software company currently. And it has some of the best-in-class performance metrics, outshining even companies like Microsoft and Apple. So Datadog's share price has tripled from its IPO back in September 2019. Can it continue this massive climb? Hi guys, Stanley here. I'm the co-founder of ValueInvestAsia.com, an investment portal where we'll give you investment news and also in-depth analysis on listed company every single week. So if you're new to the channel, remember to hit that subscribe button so you'll not miss out on any of our new videos. Today, let's dig into Datadog to see what makes this company so special. Firstly, Datadog is disrupting the data monitoring industry. Large companies often install software and services across a wide range of their computing platforms. So monitoring the performance of all these applications can be tedious, time-consuming, and error-prone for the IT team. Datadog basically simplifies that process by consolidating all that data onto a unified dashboard. Currently, over 400 software platforms, including AWS, Microsoft Azure, provides native support for Datadog services. And customers are loving Datadog. Demand for its services is rising. The company ended the year 2020 with more than 1,200 customers, each generating over $10,000 in annual recurring revenue. The number of customers with over $1 million recurring revenue rose to 50. Secondly, the company still has a huge market potential to grow into. Companies that house their data in the cloud can end up with a very complex set of data and information, and it is very difficult to monitor. This is where Datadog's platform really shines. It provides monitoring services across public cloud, private clouds, both on-premise and off-premise hybrid environment. Datadog estimates that the IT operating management market is a $37 billion market opportunity by the year 2023, and the company's services can address about $35 billion of that. Now, when we compare that with the company's full year earnings in 2020 with just $603 million, it shows just how much potential still lies ahead for Datadog. And the company's action is speaking louder than its word. Datadog is doing a great job in executing its growth strategy. The company saw its revenue grow by 83% and 66% in the last 2 years respectively. In the third quarter of 2021, its revenue grew again by 75% year on year. The number of large customers, which are customers with an annual run rate of more than $100,000 or more, surged to 1,800 from just over 1,000 a year ago. Moreover, management expects that the year 2021 full year revenue to increase to close to $1 billion. That will be an increase of another 65% from the previous year. But the most appealing aspect of Datadog business is that the company has some of the best-in-class metrics for a SaaS company. Datadog has recorded gross margin of around 75% to 78% over the past 3 years. And it expects to record non-GAAP operating income between $133 to $135 million for the full year in 2021. The reason why Datadog can be operating at such a good margin, even at such a high rate of growth, is that it has one of the lowest customer acquisition costs. The customer acquisition cost payback period measures how long the company takes to earn back the marketing dollar spent to acquire a new customers. It can be calculated with the expected annual gross profit from a new customer divided by sales and marketing spend for the prior quarter. Alex Clayton, a general partner at the VC firm Meritech Capital, has provided a fantastic chart comparing Datadog payback period against other listed SaaS company. And according to him, Datadog can recover all its marketing costs to acquire new customers in just around 10 months. The only company that does better is the video conferencing provider Zoom, while most SaaS customers need more than 30 months to recover their costs. On top of that, Datadog existing customers are also spending more on its platform every year. In the third quarter of 2021, Datadog's dollar-based net retention rate was above 130%. This means that an average customer is spending more than 30% each year. Datadog charges customers based on their usage, so the more users are on this platform, the more customers is paying Datadog. In addition, Datadog has consistently introduced more products on its platform as well. In the same quarter, it announced 10 new products and features at its annual user conference called Dash. Datadog used a land and expand growth model. This means that the company focused on winning new customers through its core product. Then it will try to cross-sell other products to the same customers. As of the last quarter, 77% of the customers are using 2 or more products, up from 71% a year ago. Additionally, 31% of the customers are now using 4 or more products, which is up from just 20% last year. This means that its strategy is working very well. Next up, Datadog is also in a pretty good financial position. In the last quarter, Datadog has about 1.5 billion in cash and has totally no debt. That reduces the solvency risk of the company, and as a fast-growing company, Datadog is already generating good operating cash flow. In the last quarter alone, Datadog generated around 57 million in free cash flow. This further reduces the overall risk of the company. So much of Datadog's success has to come from its constant innovation and creation of new products. The firm initially only offers just infrastructure monitoring. Today, it has services to monitor the entire technological stack for its customers. This single viewpoint dashboard of the entire technological stack proved extremely popular and is one of the reasons why the company has been growing so fast. This means that Datadog's innovation and technology upgrade will be key in ensuring that the company remains its market dominance in this space. So in summary, Datadog has the potential to become one of the top dogs in the industry. But there are also risks associated with this company, especially when it comes to executional risk and the threat of new competition. It is also hard to ignore Datadog's extremely high share price at the moment. The company's current market capitalization is about 44 billion, which is 44 times its 2021 sales. That is a very high valuation by any measure. This means that much of Datadog's future growth is already priced in, and its share price could sell down if the company fails to meet its growth expectation, like so many examples we have seen this earnings season. So, are you guys still optimistic about Datadog's prospect? Share your thoughts with us below. So, if you have gotten value from this video, I hope you give us a like and share it with a friend who you might think will benefit from it as well. If you're ready to take the next step into investing, remember to check out our free investing course at valueinvestasia.com/free course. There you can learn practical skills of investing like reading the financial statement and to how to value a stock. As always, till we meet again, my name is Stanley. Invest safely.